Hello, everybody. How are my trading warrior brothers and sisters? Hello, Arena. Who else is here? Alexander, how are you? Ren, the whole crew. So let's take a look around. Lunar eclipse, super moon, blood moon, moon river. Okay. So starting off with S&Ps, we got a test of this 4185 that it held. It's tomorrow, Monica. But thank you. Hello, Sinatra. 4185 held. I don't know if it's going to. It might change the picture for me. Maybe we're going to take it out and trade down to 60. Okay. And yesterday, Blake interjected when I was talking about Euro pound and shorting the euro. And Euro pound definitely has it's a pretty good call and a nice turn. And I was talking about being short euro for turnaround Tuesday. Have about 40 pips in it here. Sold it up here yesterday before face opened. Uh, a Gartley. Oh yeah, maybe. Anyway, it looks like this is just the beginning for us to have a 2 week reversal. It's only Wednesday, but I think it's possible. So the 2 week reversal, and remember, we have to get to Friday, is still pretty far down there, 2145. And for this trade, you could take partials if you took it. You have 40 here, just in case there isn't continuation. But I think that we're going to end up around this moving average. And I'm not declaring a euro top, a final top in euro, or to me, it's just a detour. Because I think even if we do achieve these objectives here, there's one more wave. Talked about yesterday for the first time in Canada. You had the dollar lower and Canada up. That's kind of a little different story, isn't it? And it's trying to cut through the falling wedge and break out here. A lot of bears left in here, a lot of stops to squeeze. The only stop I could see on the downside would be this low, just in case this breakout fails. But, we had pretty glaring divergence and we didn't even get a third drive yet. So to me, I don't know if you could fade. I wouldn't be short in Canada with the action here. Crude a little bit lower, still hanging in there about BE on the trade. And just want to point a few things out in metals. Gold continuation move. Just want to show that we're approaching the 61.8 level at 1921. Okay, and with gold making new highs, is it confirming? Not really on the 2 hour. Not here, but a third drive, if we had three up here, could take us to 1920. And with that happening, I don't think you're going to see new highs for this rally in the silver market. In fact, I'm noticing silver really likes the 78.6 level. This was 78.6 back of the total move. And in silver, we're playing around the 61.8. So if gold could extend another $13 up towards 1920, perhaps the silver has 28.40 in it, which would be a 78.6 level. And still looks to me like the gold silver ratio is favoring the long side of gold and the short side of silver. So gold making new recovery highs day after day, and silver may be setting up a failing rally. Yes, DJ. Marco Swiss is kind of a mirror image of the dollar. Kind of looks like Canada trying to come out of the hole. We did get like, looks like a 3 to me here, even a tight 3, a 1, a 2, and a 3 that held above 30. We've been diverging since the 10th of the month. So, that's a while. So, that's something that Blake brought up. I'll let him cover that, Frederick. It's a good question. So I'm not declaring, like I said before, I'm not declaring a dollar bottom, but you never know about bottoms and tops. If it's just a bottom, a top, rather than the bottom or the top, only as time passes and you look through a rear view mirror can you really know. Okay, so you just have to do the right thing today, and tomorrow will take care of itself. Everyone with me? Just do the right thing today, and you don't have to worry about tomorrow. It'll take care of itself. Yen, this is something else I was right about all week, that yields were a failing rally here. And looks like we're on our way to test this low of the NFP a week ago Friday. And just a simple measured move. What was the high here? 177. So let's call it 30 bips, and that would take it to about 120. I'm not sure if it's going to be because of risk off or just the lower yields are going to support the market. Still think there's a chance for a melt up above 4,300 in the S&Ps, but we could have this, you could say that we're putting in a failing rally there, and it could be in NASDAQ, but everyone here knows I'm looking for new highs in both and would love to see the NASDAQ take out 14,000 and develop a third derived formation on a longer term chart. And this is what I have to say to you, Zaid. Word to you, bro. Blake, can you give me the translation? When someone says word, what it means.
It means you have to look that up in the dictionary.
All right, I don't know. Some type of, I think it means I understand.
All I know is my kids use all sorts of slang to see if I'm cool, and obviously I don't pass the litmus test there. So
they ever say word to you? Word, Dad.
No, that's something that I would say. So that definitely.
Oh, that's old. Yeah.
Yeah, it's very, very old.
You said yesterday, Blake, that if we started trading, I believe under 122.5 in the euro, that you're gonna probably turn negative on it.
It closed yesterday at 122.45, and I was a little nervous about that upside breakout. And it's weird because on days like today, when I got up this morning, I was like, okay, well, why is the euro trading so heavy? That's the first thing I ask in the chat room. So I get in the chat room, I'm like, hey, before I even read anything, I'm like, hey guys, what's happening? Why is the euro so weak? And everybody's like, oh, there was some negative comments, from the ECB, and that at that point, I'm like, okay, well, now I need to go look and see what's going on. But it just so happens that the ECB is sharing some, they're just providing some negative commentary, and their dovish remarks, and that's what's affecting the euro. So this is us in the chat room. And
Amanda called this too yesterday, looking at EG, thinking that euro was overdone and that EG was overdone and could come off, which put pressure on the euro and supporting cable.
Yeah, and that's one of the points that I was making. I'm like, it looks like it's some of the cross action, because that was my first. These are comments from the chat room, an hour ago, and Nitish is like, oh yeah, the ECB guys are being dovish, and Amanda's like ECB doesn't like yield comments, and so you see like the comments that are coming through. I thought it would be some euro cross action as the euro New Zealand, for example, just absolutely got destroyed, down almost 2%.
Wow.
But that was following the RBNZ, obviously. But one of the things that I wanted to point out here is that if you read the euro, like here's the euro New Zealand analysis, and said the 170 level continued to reject rallies. Some more support may be back at the 50 DMA, but we kept rejecting this resistance here, and that opened up some downside. So I was like, oh well, maybe we're seeing some euro cross action coming in, and the euro Aussie I knew had already pulled back a little bit. And like as you pointed out earlier, the euro sterling's pulling back a little bit. I actually have like really zero opinion about the euro sterling right now, other than we held the 618 retracement like 2 weeks ago, but I'm not really too sure what to do with this particular pair. And this is actually one of my more favorite currency pairs to trade normally. So it's one of those things. But I do want to point out, and it's not by my observation. I did tweet about it, but I tweeted about it because Mark Chandler brought this up, that the US dollar CNH is really breaking down. And guys, I'm going to reiterate, this is tradersummit.net. If you guys want a good place to find, like when I get up in the morning now, because let me explain to you my mindset actually about 4 months ago, when I was trading for Gelos. I'd get up in the morning and I would have, a bunch of like overnight research from different banks. I don't get that anymore because I don't have access to that. That's one of there's a few downsides with not trading for the Gelos firm, which I did trade for several years. One of the big downsides is not having the research anymore. The other big downside is not, having some of the guys that I traded with, which I filmed a video for you guys yesterday, which I was actually referencing some of those guys from that firm because they are really some of the best in the business. But not having bank research is a little bit more
did it help a lot, Blake?
Not really, but well, let me just say this. I knew which bank research to read and which not to read, and which ones I cared for and which ones I didn't. But I could get like what was the overnight price action and why. And so one of the things I love about Trader Summit is coming here and reading all the stuff from like Mark Chandler and Boris from BK Asset Management. They give me a really great briefing of what has happened overnight, and that's one of the best things about Trader Summit, aside from the stuff that's released during the day. But what happens over here is really great. So you make sure you guys check it out. Anyway, the US dollar CNH is breaking lower, and I'm thinking, okay, this is going to be a risk on type of move here. The move below these lows in the US dollar CNH. That's typically going to let us know that markets want to take a risk on type of approach, or that's the type of mood that the market's going to be in. What's really interesting is you're seeing the DAX actually roll over, and S&Ps are not trading as bullish as I would think. So what I'm going to be watching for today is to see if we get a continuation of the US dollar CNH. If the US dollar CNH actually continues to build momentum to the downside, I'm going to think that the S&Ps are going to be breaking to new all-time highs here soon. Okay. Um, and if the US dollar, CNH actually reverses course, that's going to be a signal to me that we might be more topping here than anything. So keep an eye on the US dollar CNH over the next, 24 hours or so. I think it's going to be really important to watch that as a pair. But yeah, the euro dollar, as Dale, as we were just discussing, one of the things that we have to keep in mind is the euro is actually reversing here at these highs at that 122.50 level. And that would make me a little nervous being on the long side of the euro. I actually don't want to be short until we break back below 121.50. But I think if you're long, you have to be taking this into consideration. And it is something that we've been discussing over the last, well, since the open this week is, we need to see a close above 122.50, and yesterday we closed really at 122.50. So it is making me a little nervous that we're not being able to get, a continued US dollar, sell off here. And as Dale pointed out, hey, we gotta watch it because the dollar index, I mean, little false breakdown below the 88% retracement yesterday. We get any type of move above this descending trend line here, and you're going to get a bit of a squeeze. This is all taking out some of the support, but it's not doing it. It's not doing a good job of it. So we could see a reversal. I think we have to be aware of that. And
Let's see your Canada chart, bro.
Yeah, I was going to say, look at the dollar Canadian. I mean, we're at the highs right now, and we're
Okay.
actually
Right there.
nearing channel resistance.
Okay.
So anyway, yeah, it's something to pay pretty close attention to. So
may not get that third drive. They don't always manifest. Sometimes two is enough.
Yeah, it could be. I mean, maybe we get a reversal. I'm not excited about the dollar Canadian showing a reversal until you get back above 122. 122 is really the you can see I have an alarm set up there, but
or maybe it's another symmetrical triangle that's gonna produce
break down
lower.
Yeah, I mean, yeah. It could. It definitely.
Yeah, I
could
see
be.
that, Steve. Yeah, good eye.
And in my opinion, I've said it many times before. As a rule, we should always have the continuation of the trend type of pattern as a first option, because when a trend is well established, more frequently than not, that's what it does.
Yeah, and I don't disagree with that at all. The one thing that makes me a little nervous too, another thing that makes me a little nervous here is that the dollar Canadian keeps probing these. This is a 2017 low, and we're not getting that bearish follow through below 120.50. We should have broken down by now, I would think. And I remember from years ago a trader that I had followed, and I still do actually, but a trader that I followed for many years, and like I said, I still do. But one of the things that I learned from him, he's like, hey, I'll get into a position. If it doesn't work out within a couple of days, I'm out. Like a couple of days max is like the max amount of time I'm going to give it. And I look at the dollar Canadian, I think about how many people have shorted the dollar Canadian below 120.50, thinking, hey, we're breaking into new, multi-year lows. And how many of them are getting frustrated because you've got crude oil that's above right now, let's just call it 60. And then, we've been as high as like the $67 range. You have stocks that are near all-time highs. Why isn't the dollar Canadian actually lower right now? And anybody who's long Canadian dollars right now is probably feeling a little frustrated. So that's something that I'm constantly keeping in my mind. Like how are traders on the other side of this trade right now feeling? If I'm long Canadian dollars right now, based on stronger crude oil, stronger equities, good risk appetite, whatever. And then you saw the Canadian dollar, or I'm sorry, you saw the New Zealand dollar overnight rip higher because of the RBNZ being a little bit more hawkish okay, I see all that happening, yet the Canadian is not moving in my direction. What the hell? At what point do you say, screw it, you know what, I'm getting out? And I think we're getting to that point in the dollar Canadian where anybody who's long Canadian dollars or short the dollar Canadian might be thinking, uh-oh.
Yeah, and what would you, and 84% based on the DSI are Canadian US dollar CAD bears and
Yeah, I
CAD
think the
bulls. Yeah.
DSI is it has been has
The action's been a little different. All last week, anytime Blake, like the Dixie would be up 10 ticks or 15 ticks, Canada wasn't responding. It would still be down 20. And I noticed so far this week, when the dollar was down, Canada wasn't giving up the ghost, which was a little change in market behavior. And I'm not declaring this about them either, but like you said, we could have a short covering rally here.
It's possible. And so, Steve, how do you factor in price action to what we're looking here? I mean, I heard what you said, and I don't disagree with you from a technical standpoint. But when price action, does price action speak louder than technicals to you, or the other way around?
First of all, there's no question in my mind that USD CAD last year found a very important top, right? I was even more convinced about than USD NOK, so that's the path I chose. But if there was no USD NOK, there's a good chance that I would have taken that trade to USD CAD. Now, admittedly, it has run a long way in not such a long period of time, considering how usually FX moves.
Yeah.
So would I be advocating that somebody should be selling USD CAD here if they have no exposure? No way. I would be, asking them to wait for a larger correction to get a better entry point. Now, if you pose the question in a different way, meaning, would I be dumping a short USD CAD position based on the recent price action? The answer is no, also. So I wouldn't be giving up on my short position just because we're seeing some momentum loss and another consolidation.
So if you were short, and I'm not saying you're telling people that are short, but based on what you're seeing here, if the price action's showing us, hey, we stop moving lower, do you move your stops? Do you start thinking maybe I need to hedge my trade? What are you thinking here?
Perhaps a combination of the things, right? I haven't yet even taken half of my profit in being short USD NOK. I came very close to getting trigger, taking half of it off, but I didn't. And so far, USD CAD hasn't done anything wrong either, in my opinion. Not even in the shorter time frames. But would I be protecting some of my profits? Yeah. Although, to be honest, USD CAD or any decent FX pair is not a casino, meaning it's not that you can wake up one day and find it 10% higher. I mean, it can happen if something extraordinary that happens 1 in 15 years has transpired overnight, which isn't the likeliest of scenarios, you know what I mean? Now, admittedly, if we start producing some higher highs, we might be looking at stronger pullback. So 120, 121.80 would probably be the line in the sand for me to perhaps take some off in expectation of a better entry price to add them back in.
Good point. Good point. Sorry, I was on mute. Well, let's hear Stelios and what his comments about price action and where we're at right now. Stelios, good morning.
Good morning, everybody.
Good morning, Stels. Happy man.
Hey, I'm sappy, you know that.
Sappy and Aegean happy.
Exactly.
So, hey, wait. By the way, before you answer, I just have to say, Dale, your birthday is tomorrow, right?
Yeah, I asked Leandro if he would you know, so he could have a platform and attract some chicks to Trufa to sing happy birthday.
Yeah, I
He's
doubt that's gonna.
nervous.
I doubt that's gonna happen, and I
Yeah,
can
I know.
guarantee you, none of us over here are gonna sing. So,
Alright.
you know, happy birthday in advance. So,
All right, thank you, buddy.
all right,
I'm 39.
yeah, good. We're always 39 every year.
Jack Benny.
So
yeah,
Stelios, what do you have to say about the price action that we saw here?
To answer your question about what you were talking about with the dollar CAD in particular, and it applies to pretty much all other currencies. When you know, I'm not a day trader and I'm not a scalper, so you know, when I take a position, I have some fundamental views. I look for certain things. I'm not like, oh, the 1 minute chart is you know, a hammer or whatever. So
Yeah.
say you're, like you said, say you're short dollar CAD, you want higher oil prices, you want the dollar to be low, you want the Fed to be dovish, you want all these things, you want risk on, you want all these things. And exactly like you said, you know, we have all these things. And yes, the USD CAD has fallen from, you know, 130 to 121 in a year or whatever it was. But you know, if you still have a position here, you want, you know, you have the position because you're expecting something. What is that? You know, there are very few scenarios now that this is going to go a lot lower. I mean, fundamentally. So you know, maybe the Fed cuts rates, or they increase QE, or the Bank of Canada start hiking next month. Yes, then you're going to be fine. But for me,
let me give you the scenario, Stelio. U.S. inflation overshooting in comparison to other countries.
Okay, and that, well, by saying that, you probably imply that the Fed's going to do nothing.
Oh, absolutely. I've said that many times before.
The question is, though, what does the market think? Because the market might price, you know, the Fed hiking or whatever for a couple of months, and then that position has gone the other way, right? So I think you're right. I think the Fed's going to be very, very slow in responding, but I think the markets slowly might just think, look, you know, there's no way they can get out of this without doing some kind of tightening. They're probably going to be wrong, but I think the market might go and price that.
Well, and let's let me backtrack a little bit here, and let me refresh what our conversation is about price action, about reading price action. I want to give you a perfect example of what had happened to me yesterday. If you guys don't recall yesterday's conversation, both Grega was long gold, right? And I was short silver. And you know, and being short silver, knowing that gold was dragging, you know, was breaking out and was above you know, this 1890 level, and silver held support over the last couple of days. You know, that price action was suggesting to me that silver is gonna follow gold higher, especially with gold breaking out. I mean, gold's gonna break out towards to the 618 retracement. I had to pull my silver short off the table, and that's more of a read on price action versus, you know, I'm still actually a little bearish on silver. I'd rather be short silver. Like
maybe Blake, when gold hits 1920, if silver's not at new highs, that'd be a good fade.
Exactly. I think you have to play that divergence, but yeah. That's you know, that's the point I was trying to make with price action is, you know, sometimes you've got to watch price action and be respectful of it. And that was a good example of me like saying, hey, you know, I got to pull the plug on this silver short. I mean,
the comment that came to my mind when I heard Dale's comment, for example, now is that if you remember, there is the old adage that says that bull markets climb a wall of worry. So you see so many people being skeptical about gold being higher because what if the Fed actually surprises and hikes? What if, you know, all those what ifs are in my mind the perfect wall of worry that gold is going to keep climbing.
Yeah, I mean, that could be it too, for sure. But
stop talking your book, bro.
And anyway, gold is above 1900. I just realized it's the you have your interview coming up, and I just want to say, hey, thanks to everybody for listening in. And remember, visit our webinar sponsors if you want to learn how to get Forex analytics for free for a few months. Open a Pepperstone account here, especially if you're outside the U.S. or Canada. Open your account right here through our website, and if you do that, and it links your live account with Forex Analytics, you'll get Forex Analytics for up to 4 months for free. So thanks everybody for tuning in. Dale, have a great interview. Steve Stelios, I'll see you guys on the on the Morning Edge in 45 minutes with the Forex Analytics subscribers.
See you
Stay
there.
sharp on the
Everybody.
Morning Edge with the whole team in 45 minutes. And Olivier, I want to welcome you back to Face. Thank you for taking time out of your day to be with us again. How are you?
Hi, Dale. Is everything working?
Sure. How about you? I mean, everything works on me. I was, got out of bed, able to walk around. Get to my, I have a birthday tomorrow. You get to my stage in life.
I heard that. I
Yeah,
was listening to the.
All right. So you remember how to share your screen in here, Olivier? The green button. And I'm thinking that you're just having a great time being long different equities during this melt up that we've had since you and I last talked.
Can you see
Here
my
we
screen?
go. Oh, there's a gap. There's
Yeah, I
gaps
was
everywhere.
I just pulled up the Fastly chart because that was the last the one we talked a lot about during our last interview. I think we talked somewhere in February, somewhere here.
Yeah.
And I remember saying it was game over because you were asking me, what do you think about Fastly now? And I was talking or going through my trade here, and I basically said it was game over. And I said that doesn't mean it goes to zero, but I was not expecting good things. And lo and behold, you see the gap. I mean, this is you would be.
Is it going to take a long time to repair the technical damage of this chart? I mean, sometimes look how many gaps you have. It's a study in gaps, and they're not all earnings related. They don't release earnings that frequently, do they? Some of these gap lowered.
I think that was earnings related again, and probably that one here as well. I don't remember exactly because I stopped following the stock.
Okay.
I mean, it's still part of my watch list. I have a watch list that contain roughly 600 stocks. I know it's a bit too much, but I go through them, I would say at least 3 to 4 times a week, and it's still part of that watch list. But to answer your question, with this gap down here, I mean, it could be an exhaustion gap. I doubt it. You could say, breakaway gap, continuation gap, but it doesn't really fit here in my opinion. So I would consider this to be some kind of breakaway gap, and that to be a continuation gap, which means that I would still expect an exhaustion gap to the downside. I could be wrong, but this is trading in the middle of nowhere. It's even worse than when we last spoke. I wouldn't touch the stock. Neither.
Okay, good call on avoid it. The only thing that could have been better was being short, right?
Well I mean, this is
I mean, look, you do one good thing and you avoid losses, but then your public will say, well, if you thought it was a broken stock, why didn't you short it, Olivier?
Yeah, you should always do even better. Yeah.
Yeah.
Personally, I think about maybe the one person on earth who listened to our interview or who listened to what I had to say about this stock and then decided to sell or put in a stop loss. I mean, this is a fantastic trade to avoid a catastrophic loss.
Right.
And, you know, I would be perfectly happy if, you know, as a trader, if I'm able to avoid catastrophic losses, the wins or the gains are going to come no matter what. But you don't have to. How shall I put it? You know, I'm not a big fan of. You just a few minutes ago you were talking about in the previous interview that, you know, some guy talked about a trader putting on a trade. And if it didn't work in the next 1 to 3 days, he was willing to take off the trade just because, you know, his analysis was not perfect or the timing was not perfect. And this is, yeah, this is what it is all about, in my opinion.
Okay. All right. What else do you have to show us today?
Well, you want me to just talk about
Yeah.
the things I see? I
Yeah.
mean,
That's why you're here.
First of all, I mean, let's look at Tesla.
Okay.
Tesla, the one thing, two things I want to say here. First of all, it's the, you know, risk on go to super tech, whatever stock. I see problems in terms of both the valuation, but that's, you know, I could be totally wrong about that. And the thing that you can analyze objectively is overhead resistance. So we had a top around, it's around 900 here. And so it's, you know, basically, you know, 30% down from the top, which means it's, I would consider it considerable overhead resistance. So, you know, the whole point is, are we going to get a melt up phase in the markets? I do believe we are going to see at least a, let's call it a significant leg higher, maybe not a melt up, but I see the markets going higher over time. And the fact
4,400 S&Ps, couple hundred, another 5%. Oh, you don't have S&Ps there.
I have, but I typed in the wrong.
Okay, yeah, and you know, getting back to Tesla after this,
I think
to me it looks like it's forming a descending triangle, which is a reversal formation, and it could still rally from here and develop. You just put a flat line at the two lows there, and maybe a downtrend line off the two swing highs. And to me, it looks like you have the potential of a descending triangle. And if 900 was the high and recent lows are about, what's that, about 6, Olivier?
600, yeah.
Yeah, so I mean, you're talking 300 Tesla on a breakdown.
Yeah.
That would be the measured move.
This is something where and that's what I'm going to talk about here. If you expect a melt up, if you expect a lag higher, and then you have a stock like Tesla that has overhead resistance and that was the leader, you know, you have to think, is it still going to be the leader? I think there's going to be a change, and that does not mean I would want to short Tesla, because it could move higher, but it could have, you know, lackluster performance, or, you know, other stocks might outperform, which brings us to Nvidia, which, if you compare the two charts, you can see the difference. This one has no overhead resistance. We have a situation where Tesla, I mean, apparently has a market cap of, let's say, 600 billion or something like that. But in reality, the market cap is much closer to 1 trillion because of all the options and the shares Elon Musk is gonna get. So
and crypto. Elon's a crypto trader now. Plus, he's you know, who knows how much they paid him to go on Saturday Night Live.
Yeah,
Well,
I mean,
what an actor.
I didn't see that because
He's going to start a television station on Mars.
I thought he was a pot smoker. Just kidding.
Oh, well, I hope so. Then I have more respect for him. All right. Anyway, okay. So NVIDIA looks like, new highs look like a layup here.
Yeah,
that what you're thinking?
they have earnings after tonight.
Okay. What do you do? Say, for example, like right now, are you positioned in NVIDIA in front of earnings, or
Yeah.
do you avoid?
I tend to avoid these things. My rule is if I have let's say 5% profit cushion. So if I'm in the green, if I'm up 5%, I tend to want to hold through earnings, and the less of a profit cushion I have, the more I tend to reduce going into earnings. In this case, I see I'm not going to annotate the chart here because you can see it. Obviously, this is a W bottom, in my opinion. You could also call this a lower high formation. This is still here a higher high compared to this one. So by definition, we're in an uptrend. And again, I'm thinking, what if the markets go higher? Which stock? I mean, and I'm not talking about a 10 billion market cap stock nobody cares about, but I'm talking about really big cap, even mega cap stocks. Although I think this reminds me of Qualcomm. Qualcomm was, I don't know, I don't remember exactly, but maybe 1/10, 1/5 of the Microsoft market cap at the time. I'm talking 99, the dot-com bubble. And I don't see Tesla increasing tenfold in a short period of time. I don't see Nvidia increasing tenfold in a short period of time either. But I can see, if we go back a bit, thrusting move, uptrend. This is a nice consolidation pattern. There's multiple shakeouts, but overall it's a bullish formation here with a W bottom. I think this could be some kind of momentum gap where price or traders are pushing the stock higher. They announced a split that will I think June 3rd or whatever it is. Not really important, but this is in my opinion. I mean, if you're the CEO of NVIDIA, I mean, I assume that these guys know if the numbers are going to be good or bad. I mean, would you announce a split and then announce bad numbers? I don't. I mean, there's still this thing that even if they announce good numbers, the reaction to earnings is what counts.
There's been plenty of that. Great news and gains in the aftermarket haven't stuck.
Yeah, but gun to head, I think this stock goes higher, and my whole theory here is that I think this stock has the potential to develop into a market darling, into the leader. It has a market cap of, I think, 350 billion. Sorry, so this is 500 billion, so almost a double. And maybe if the stock moves up 10%, then it's going to be like 670-ish, and then it's going to be like round number 1,000. I think this is the setup here with this stock, and that makes me very bullish. I mean, if the stock reacts badly to earnings, I'm out, or I'm going to reconsider.
Yeah. I mean, really amazing run since a COVID crash, up 400%. Let me ask you, Olivier, when it peaked, it looks like September-ish, and then started moving sideways into what you called, correctly so far, consolidation. But how do you know the difference between, after a big run like this, whether it's consolidation or distribution?
Well, it's going to be a long answer.
Okay.
But first of
We have
all, you
to-
don't know, but you have hints, you know, and it's like if the indices are looking great. If you look at the S&P 500, it sure looks like it wants to go higher and print new all-time highs. Or maybe it's going to explode higher. Maybe it's going to print a new all-time high and then reverse. Who knows? And then the next step is what does the market look like if you look under the hood? That is, are there lots of stocks setting up, or are there lots of stocks being distributed, showing reversal patterns, rounding tops, things like that? What I also, and I'm starting to see constructive action with lots of stocks, semiconductors come to mind.
Last Wednesday, nice reversals. Didn't they start off 2% lower and turned last week? SMH and SOX. Yeah.
Semiconductors, yeah.
Yeah,
I mean, this is, I mean, this could be a top, but this could be the same as we saw with NVIDIA. This is a huge run up, and this is so far, you as I like to say, you have to give it the benefit of the doubt. You know, if there's no breakdown, and I like this small gap. You can see that here. This is a sign of, let's say, renewed momentum. You know, it's something that is
they could squeeze the shorts over those highs.
Exactly. There's no overhead resistance. And if you're betting on, you know, or if you want, let's say, super performance, you want to focus on stuff that has no overhead resistance, because, you know, first of all, it's the best traders go for stocks that have no overhead resistance. If this thing goes higher, prints a new all-time high, everybody's in the green, so there's no reason for selling. So there's not a new all-time high does not create selling pressure. The opposite, you know, it creates buying pressure, because all those who are short have to ask themselves, where is it going to stop if we print a new all-time high? It can run up, you know, another, I don't know, maybe even 50, 100%, who knows? And yeah, your original question was how do you see if something is you know, a continuation pattern or distribution? Again, compare Tesla to NVIDIA. Tesla to me looks like potential distribution. This one actually looks like accumulation. And the last piece of information I like to concentrate on or upon is if we see shakeouts. So this to me is a shakeout, an undercut of this level here, maybe this one, maybe this one. Right. I'm not sure if this is actually an undercut, but probably.
Yeah, it
and
is.
Then, you know, retest of the original support level here at this point. And then, you know, this is like, get me in at any price, you know, and then, you know, the whole move to the downside here was on, relatively speaking, low volume. Now we have an increase in volume again when the stock moves higher. This looks like accumulation.
It's classic. Yeah, nice. I mean, good point about the volume. So it corrects on lower volume and then turns on stronger volume.
Exactly. The only thing you have here is this, let's call it some kind of, I mean, it's not a climax top, but it's a you know, the stock has run its course here at this point of time. And then you get big volume, obviously. But then afterwards, it's like almost all of the accumulation happens on bigger volume than the selling or the sideways move here. Look at the whole sideways move here, basically stock going nowhere. And it's just like rather low volume. And now we have the stock picking up or moving up in price, and the volume is roughly, you know, twice as high. You know, I'm slightly exaggerating, but it's significantly higher. And you have to be constructive on this one. You have to wait for earnings. And if you're again to your with regards to your prior question, if you know, it's this.
Maybe the answer is you only know in the rearview mirror whether something, whether if
Yes,
it
but
breaks up.
that's not actionable advice. You know, actionable advice would be, sell down to your sleeping point. If you're nervous, sell half your position. You know, and then hold through earnings, and then
What do you do, Olivier, if you still have a hard time sleeping and you're flat the market?
That's a good
Anyway,
question.
you say sell down to your sleep level. It was a joke, I guess,
Yeah,
kind of a bad one. So I'm flat and I'm flat and I still can't sleep. So, okay.
Which goes to show that we're probably not at the final top, because the way you describe it, and we're talking about stocks. I'm a stock trader.
Yes.
I think many people are in a similar situation right now. Everybody, well, let me put it that way. What's the easy thing to do? The easy thing to do is, we've run up so much, so high. Everything is too expensive. I'm going to stay in cash. But what if the markets still go higher? I'm not saying, bet the farm, go in like crazy. I'm talking about people who know what they're doing. And if the markets go higher and you have professional traders that are on the sidelines, they will have to make a decision, and if you have sleepless nights now, and then the market goes higher, you will get drawn back into the market.
Okay.
That's
all right.
And this is the scenario I think will unfold. Will it unfold starting today? I'm not sure. This could, this is constructive price behavior. We could easily see the stock move sideways for another 4 weeks and then start a run, or break down or whatever. I'll pull up another chart, which I'm bullish on. You were talking about silver. This is a silver miner, obviously Pan American Silver, one of the, I would say, the largest ones. They have some gold mines as well, but it's mostly a silver miner. Again, the same question you asked, is this a continuation pattern or is this accumulation? This was an earnings announcement, initial bad reaction, and now the stock has recovered that one. This is
yeah, that's a pretty long consolidation.
Can you you can't see? I need to share another.
No, I see the Pan American Silver.
Yeah, no, I was opening up something else. Anyway, let's leave out the annotation. It's this, you have the huge sideways move, and everybody's like expecting, here it's going to break out to the upside, and then it does the exact opposite, breaks down, but then recovers. Often, this is something you see at the beginning of a new strong trend, the last shakeout, trying to get rid of everybody. Let's call them weak hands, or, it doesn't matter what you want to call it, but I like to call it the last shakeout before the true run or the true move starts. And this has the potential to be such a setup where the stock then starts to move higher. If you look at the monthly chart, you can see that this has no overhead, not no overhead resistance, but almost no overhead resistance. And this is the difference between trading, let's say, silver itself, the commodity, the underlying. Are you still there?
Yes, I am.
Something popped up here. I don't know. And trading a silver miner. So even if silver goes down, this is something that looks better than the silver price itself. And with mining stocks, you always have the possibility for drill results to come out, and then the stock to I don't know, move up 10%, regardless of what the price of silver is doing. So if you have a good looking silver miner, from a technical perspective, I'm willing to not focus too much on the price of silver. And
Okay.
there's
We
one
have
more.
a very educated audience here, Olivier. Hannah says that this reminds her of Wyckoff analysis. Do you use that?
Wyckoff?
Wyckoff?
Oh, Wyckoff.
Yeah.
I'm familiar with a few of his, you know, the basing pattern
Rules.
retest, SOS, etc. I'm
Okay.
not. Yeah, I mean, most of the stuff he does, or I have come across, is sensible. I would say it makes sense. Yeah.
Okay. Well, you know, we're approaching the.
This
Go
could be some Wyckoff type of thing, you know, basing
Yeah.
pattern, breakout, retest, in this case, deep undercut,
Yeah.
you know, because of
COVID.
the COVID thing. And then,
Boom.
yeah. And then this could be, you know, a thrusting move. I'm a huge fan of ABC patterns, simple stuff, you know, A,
Yeah.
B, C, and the C leg, the start of the C leg would coincide with a break to new all-time highs. And then it could be really explosive, you know. I'm not
Yeah.
saying this is a 10 bagger, but this could easily go to 50 or 60, you know. So
Yeah. Okay, well, some real nice charts and looks and explanations from you again, my trading warrior brother. If people need more, want more of Olivier Tischendorf, why don't you show people how they can do that? I've been to your website. They could follow you on Twitter. You have a clean, nice website. I went to it again this morning, and there you go. So
really simple, and from there you can access my Twitter. You can read about you know, interviews of mine, the books I own, some quotes, everything. It's pretty, and you can access my premium website. Yeah.
okay. All right. Well, Olivier, I want to thank you. Some very good looks. You know, I hope you have wrap up this spring trading season with windfalls, and have a great summer coming up. A great summer of trading, and it's. I appreciate your giving spirit to come here and share your hard work with us.
You're most welcome.
Okay, so you know.
I thank you for the interview. It's always nice talking with you.
Okay, well then we'll do it again.
Sure.
How's that? All right.
That's a
Okay.
good idea.
I'd like to keep you in the rotation,
Yeah.
and you have people thanking you, Olivier, Monica, and Dolce, and Ingmar, Hannah. So people enjoyed you and appreciate, you know, you being willing to edify our community with what, you know, was hard work for you to get from point A to point B to see these things. So appreciate it.
That's true. That's basically, I mean, it took me, well, I've been trading for 23 years now. It didn't take me 23 years, but it takes a long time, you know. It's trading it's not easy.
Yeah, I'm still learning.
But as
I've been doing it 40.
As we learned recently, you just turned 39, so you still have a lot of time.
Yeah. So, you know, I'll get the hang of it one of these days, right? All right, Olivier. Well,
excellent.
Thank you so much, buddy.
You're most welcome.
All right, everyone. That's going to be a wrap, and we'll see everyone tomorrow. Enjoy the total lunar eclipse, and let's see if we get any kind of reaction when people get emotional over the next 24 hours. So thank you again, Olivier. Thank you, everyone, for hanging out with us. See you tomorrow. Adios.